Good morning, everyone. Mark Avari here with a Rate Watch update to take a look at the mortgage-backed security market, get a sense of where the interest rates are headed. First of all, the producer price index was out yesterday. That's the index that measures the selling of price, the cost of prices over time, um, more or less, and it translates the number that came out yesterday translates to an annualized rate of inflation about 6%. That's the whole ball game. That's what the market is concerned about most. It reacted, as you can see here, very negatively. We have a big gap down opening today, which translates into some higher rates. Now, the Fed is meeting tomorrow and rates will be obviously discussed. And going back to our fundamental here chart, as you can see, as I push this up a little, if I can do that, you can see there's a lot of news coming out this week. So, you know, we can go in a lot of different directions, I think. But one of the things I do think there probably could be some improvement here in the short term today, than before we get some news tomorrow. Because if you look here, this is the 200-day moving average. We have fallen, I think the market probably overreacted to that PPI number, had a big gap down opening. We'll probably try to close this gap a little bit, get closer to the 200-day moving average. The market doesn't like gaps, so and you have this gap here, and so generally speaking, that is something that usually can happen. Now, when you look, here's our support line here, so you can see. Even on the way, I mentioned we could go up. There is a lot of support to move up on our technical support line that we can look at. And let's overlay our resistance line. So there is some resistance towards the top here, but it could potentially move up here a little bit. We could see some pricing improvements. As you look over here on this column here, the lenders that were the subscribers to the service that are industry experts, it's pretty much a mixed bag today of talking about floating and locking. My tendency probably is to float down here because it has the potential to go up just a little bit and translate into lower rates. And here is, it's not very, didn't turn out all that well. Hopefully you can see it. This is 97.8 and 99 on the 40 in the 4% coupon, and I drew this a few days ago. This is the trading range that over a 3-month period of time, with the exception of this blip up that we had about first around Thanksgiving, where we had some nice prices in the interest rates. This is generally speaking the trading range, and here's where we're at today. So that's why my tendency would be to float today, because it has a potential to go up into this trading range. But again, with all the news that's out in the market right now, we could get knocked out of this trading range really quickly. So it's something to be very careful about. So, to recap, in conclusion, I do think there's a potential to close this gap up, get close to the 200-day moving average. I think it was a little bit of an overreaction, but if we take a look at how our lenders are reporting in, 90 lenders are reporting in, 87% are showing unfavorable corrections due to pricing. So, if it's going to take hold, it's going to have to take hold pretty soon, because, as I mentioned, it's a big news week. Fed's meeting. The PPI number is a very alarming thing. We know rates will be going up in 2010. So we could be moving out of this trading range into some higher rates pretty soon, and this could be the forerunner of that. So the word would be to be cautious right now. Certainly if you have stuff in the immediate couple days that you need to make some decisions on. Hope you found this information helpful. Have a good day, everybody. Thanks. Bye bye.